Do you have a trade entry checklist? If you don't, then you definitely need one. So in this video, I will be sharing my own personal trade entry checklist that I use to pass FTMOs and trade the live funded FTMO account. So why do you need a trade entry checklist? Well, you need it to avoid taking too much of the valid setups and to focus on taking only the high probability textbook no-brainer trades. It is really important to distinguish between the two, especially with FTMO where you have a 10% drawdown limit and where you really need to avoid taking too much valid setups and stacking those losses. This checklist will help you to really eliminate those valid setups and to take the high probability stuff that brings the high risk to reward percentage. So I use the checklist on my phone. I have the questions on the notes and I go through each question. There are 6 questions and then I write down a yes or a no answer to each question. So the first question on my list is it Monday or Tuesday? Why do I have that question? Well, according to my backtesting, most of the setups taken on a Monday or Tuesday usually fail. It usually ends up being a loss. So on a Monday or a Tuesday, I need to focus on taking the high probability no-brainer textbook stuff, really the cream of the crop trades. So most of the time I will avoid taking a trade on a Monday or Tuesday unless it's really high probability. So if the answer is no to this question, then I know I can be a bit more lenient with taking the setup. But if the answer is yes, so if it's a Monday or a Tuesday, most of the time I will not take the trade because I just don't want to risk. If it's really a textbook no-brainer trade, then I will take it, but it needs to be really clean. Second question is price action stuck in a channel-to-channel range-bound market? This forces me to look at the larger picture and to actually focus on how the larger picture is acting. I'm a trend trader. I'm not trading the range. I don't want to be trading the range. I don't want to get caught up in trading the bottom of the top of the range. I want to get in on the trend. I have had many cases where the price action looked really good, but then when I zoomed out, it was really range bound. So I also took the trade, and then later on when it lost, I was looking more on the larger picture and saw the channel to channel market and was really hitting myself on the head and saying, why didn't you look at the larger picture? So this question really forces me to zoom out, look on the larger scale and see that the price action is in a range to range channel. If the answer to this question is yes, if the price action is stuck in a channel to channel, then I'm not taking a trade. I'm a trend trader. I'm not trading the range. I'm avoiding all trades stuck in a range. The third question is the market condition trending? Now this actually forces me to think about, is the market condition in just the start of a trend? Is it already an established trend, or is it a really strong trend? So there are 3 parts to this question. If it's a start of a trend, I'm being a bit more careful. I'm just not taking any sort of a setup. I'm only taking the cream of the crop because, as I said, it is the start of the trend. It's not that high probability to continue. If it's like a good trend but not really with strong legs, then I can be a bit more lenient, but still I'm on the lookout. And if it's a really strong trend staring you in the eyes and just shooting in my direction, then I know I can be really lenient with the setups. Maybe avoid those really long wicks, but most of the setups I will then take if it's a good break and if it's a good pullback, because again, in a really strong trend, it's worth that 1% risk to take those trades. So if the answer to this question, is the market condition trending, is a strong yes, I'm taking the trade. If the answer is, well, it's just the start of a trend, then I'm being a bit more careful. I'm thinking this through, and the setup needs to be really clean if it's just the start of a trend. Fourth one, is it a good close? A good close to me is if the impulse finishes without a wick. If it's a clean close, it makes the trade much more high probability. Most of the time when we get a clean close, so without a wick on top of the impulse, price pulls back a bit and then continues. For us trend traders, that's exactly what we want. We want to get in on that trend. So if the answer is yes, if it's a clean close, it makes much more sense to take the trade. And I have been caught many times where there was a wick or even a small wick, which made the trade not as high probability, and then I got caught in a loss. This forces me to look for those clean closes in the market. Then we come to the fifth question, which is the pullback engulfing? An engulfing pullback to me is when the pullback engulfs either 2 or 3 of the impulse candles, maybe even more of the impulse candles, and it signals a clear momentum shift, and it signals that maybe the trend is over and that the price is ready to reverse. I'll put a screenshot in the video so that you can see what I'm trying to explain, but essentially it signals a momentum shift and it makes the trade much worse. Most of the time these trades lose, except maybe on the euro and the Japanese yen, where an engulfing pullback can be tolerated, but only in certain cases. On most of the pairs I trade, an engulfing pullback is a big warning sign, and this just reminds me, look at the engulfing pullback. How does the pullback look like? When you place your entry order, how many candles will the pullback take out? So it makes me focus on that engulfing pullback and to stay out of the engulfing pullback. And now we come to the final question, which is it a no-brainer trade? This one is the most important and it is the most helpful question that I have on my checklist. Is it a no-brainer trade? Yes or no? If it's a yes, I'm taking it. If it's a no, I'm staying out. It's my subconscious trying to say to me, look, this doesn't fit your plan. This is not a no-brainer trade. This is not a textbook trade. This pattern you have maybe not seen before. It's not a clear pattern. Something is off. So don't take it. And this is very powerful, especially if you write it down. So what I advise, don't just go for these questions in your head and say yes or no, but actually write on your phone yes or no. That way, when you come to the is it a no-brainer trade, you will write down no, and that is your subconscious trying to warn you that it's not that good of a trade. So with this final question, I managed to avoid many of the valid setups and many of the losses, which is very important when trading a funded account in the challenge and in the live stage, because you have that 10% drawdown, and if you hit it, you're gonna lose your account. So you can't be taking many of these valid losses. You must focus on the high probability, no-brainer textbook trades. So try it. It definitely works. It's really helpful. Actually write down yes or no answers. Do it on your phone. It's very easy. It's very fast. Do it before you're taking a trade. It takes about 15-20 seconds, and it will make a major difference in your trading, and it will help you to pass that FTMO challenge. So if you guys want to check out daily trade recaps and forecasts, check out my channel. I also have some other interesting content, so definitely subscribe, like this video, and I will see you guys in the next one.